Have you heard all these people talking about starting a private lending business and you're just like, where do I even get the money to do something like that? And what is the amount that I need to start that type of business? Well, I'm here today to help you answer that question. So, where to get the money? I will start with telling you where I got the money to start my private lending business, and then we'll talk about some ideas of where you can get the money to start your private lending business. So, I actually had a job before I became a lawyer, and I was a teacher actually. And I had a 401k, or it wasn't called a 401k, I think it was called like a 403b, or I don't know, whatever it was called. I had a 403b retirement plan or whatever, and I left that job and that money was still there in that retirement plan, right? So I didn't know anything about private lending or IRAs, honestly, at the time. So what I did actually was I rolled it into an annuity. Now, I would not recommend that today, but I'm not a financial advisor and this is not financial advice. We can get into that later, maybe in another episode. But I will say that was an opportunity, okay? That teacher retirement plan was an opportunity for me to start a private lending business. Now, let me tell you why and how I actually got another opportunity. So, when I became an attorney, I was working at a law firm, and that is where I had a 401k. So, you know how every month in your paycheck, you might set up some plan with your employer where you contribute a certain amount of your paycheck to a 401k, like an employer sponsored retirement plan, or some employers also have a match program where, like, not only do you contribute, but they match what you contribute up to a certain amount. So you might have something like that at your job. So I had that at my job when I was working at a law firm, and I would put in the max amount from each paycheck, or the max amount per year. And we did not have a matching program, but that money was just building, right? So that's money that we can't touch until retirement age, so 59 and a half, at least as of the time of this video. And that money was just building, right? And when I ended up switching jobs, when I went in-house, that money was still in that employer-sponsored retirement plan. So let's call that previous job the firm job. So I had this retirement plan with money in it, this account at the firm job, yet I had moved to a new job. And so at this new job, I set up a new 401k retirement account, and then I started contributing to that. Meanwhile, that other account is still there. It had about $60,000 in it. And I didn't think too hard about it. I was so excited for the new job that I just started the new job. I didn't even do anything with that retirement account, and I just started contributing to a new retirement account. Kind of along the same lines as I did with the previous one, except with this new job, they provided a match, which is amazing. So I had that going. And then one day I was listening to, I was exposed to the idea of directed IRAs in various ways. And eventually I decided to open one, a self-directed IRA. And in that process, I was trying to figure out, how can I invest this money? And that's when I learned that I could use it to create a private lending company. Now, where did I get the money? I took my previous 401k, so from the firm job, that 401k that was just sitting there, and I rolled it over into a self-directed Roth IRA. Now, the way that I was able to roll it over into a self-directed Roth IRA is because at the firm job, my 401k retirement account was a Roth retirement account. So it's like to like, Roth to Roth, or if you had traditional, it would be traditional to traditional. I think there may be ways to change it if you start with traditional and need to go to Roth, or if you start with Roth and need to go to traditional. I'm not totally sure about that. That's a question for your accountant. But that's how I started. So I had a Roth 401k that was just sitting there that I hadn't rolled over, and then I rolled it over into a self-directed Roth IRA. Now, remember, I had about $60,000 in there. So I rolled over the entire $60,000, And then I put 10,000, I left 10,000 in the IRA account, and then I used 50,000 to open an LLC in the directed IRA, so owned by the directed IRA account, to start a lending company. So that's where I got the money. So I rolled over a previous 401k. Now that's how I got started. Now there's a ton of ways that you can find the money to start your own lending company. And then there's also that whole drawback of, well, if I start it with my retirement account, I can't really access any of the money now that the retirement account makes from private lending. So that's something that we're going to address in a later video. But let me just give you a hint, a sneak peek, if you will. So one thing that I've learned to do, like if I want to benefit from the actual loan transaction, but I'm lending through my retirement account, is splitting up the loan. So let's say someone wants to borrow $10,000, and you have the money in your lending company with your retirement account, but you also have some of the money just in your personal money. So sometimes I'll split up the loan. Instead of giving all 10,000 from my retirement account, I'll give a portion from my personal money, and that's one loan. And then I give a portion from my retirement account, and that's another loan. But that's advanced strategy. We'll get into that later. For now, let's talk about other ways that you can get the money to start a lending company. Now, let's start with the obvious, a savings account. Do you have money in your savings? I know borrowers, so contractors, investors, who need funds as low as $2,000 to borrow. Now, if you have $2,000 in your savings account, you could start a lending company with that. Now, of course, you have to go through the work of finding those buyers those borrowers, and I can definitely help you with that. Make sure you join my email list for opportunities. The link is in the description. But if you have $2,000, you could definitely start there. Now, I don't know any investors or contractors who have asked for loans lower than that, but that doesn't mean that they don't exist. You also have people who need loans for their earnest money deposits. So like wholesalers, they may need to borrow $1,000 for a few weeks just so that they can process their wholesaling transaction. So you don't even necessarily need tens of thousands of dollars like you think you might need. You could just start with $1,000, $2,000 and take it from there. Like just continue to grow your money from there. So we have first a savings account. And then of course, like I always talk about, we have an old 401k. You can roll your old 401k into a new IRA, whether it's Roth or traditional, and use that to start your lending company. So that's two ways. Another way you can do it is taking out a loan. Depending on the terms of the loan, it can still be highly beneficial. So let's say hypothetically you have zero money. Let's say you have less than $1,000 to start your lending company, but you have access to capital through a loan. Let's say maybe you have a loan of $50,000 with a 5% interest rate or something like that. You can take that money and then turn around and lend it to contractors, investors, whoever needs the money for more than your interest rate. And so then you start making money on the money, right? This is literally what banks do. Like that's how they make their money. You can do the same thing. So that's another way, a third way. A fourth way that you can start your lending company is by using your credit cards. Now, this is a little riskier, and if you are not a responsible credit card user, or if you do not really trust the person you're lending to or the company you're lending to, or if this company or person has a high risk of not paying you back, I would not recommend this method. But if all is well, this could be available to you. So what I've done before is, instead of lending cash money to people who need a loan, sometimes I have let them borrow the money by paying for an invoice. So, example, a contractor needs to buy countertops for a client for a house that he's working on or she's working on, and maybe they don't have the cash or the credit to pay for that invoice. but they will once they're able to take a draw later on in the project, once they can show completion. They might need the money to just pay for the invoice. And a lot of times the invoice is sent, via a link that you could just click and pay, or you just call and pay. There's various ways to do it. But if you have a credit card with a high available credit, or maybe you have some other access to cash, we'll talk about that one next. But if you have like a credit card, you can make that payment on their behalf, of course, pursuant to all your contractual terms and agreements and everything. But you could pay that invoice, and then when they're able to take their draw or they get paid back, you can receive the cash, pay off your credit card. This is the best when you get points. So what I've done before is use my Amex Platinum to pay an invoice. The contractor was supposed to pay me back in 3 weeks. So I'm barely paying interest on that, right? And so I charge a flat rate. Usually I don't usually charge an interest rate, but you can do what you like. And of course, my flat rate well more than covered the interest that I was going to be charged for the credit card transaction. So I used my card to pay the invoice, and then 3 weeks later, I got paid back in cash. So then I just pay off the credit card and pocket the rest. So instead of pocketing the rest, you can put that into your business bank account to start your lending company. There's that. Another way is if you have leverage through something like a HELOC. Like, let's say you already own a home and you have a ton of equity, and either you have a home equity line of credit or you can get a home equity line of credit. And then you can draw from that line to give loans and then pay the line back, and then use the money to build your company, or use the money to create new loans, or use the money however you want. I don't know, as your lending company. The point is, there's tons of ways to do this. There's so many ways to get started. Just to recap, you can get started as low as $1,000 in my experience. But I've given loans up to $50,000 at this point in time. I'm building up to give bigger loans. And eventually, so one thing I'm looking into for the future is these kind of insurance policies where you can like borrow against them. Because I feel like that's a great way to leverage an insurance policy to give larger loans and to make money faster. So one of my pain points right now is I can't give loans to a ton of borrowers at once because my funds are limited. So if I can get a good insurance policy that I can borrow against, which is a future thing, then I think that may open up some doors for me. But anyway, that's a later conversation for another day. The point is, you can get started in private lending with as little as $1,000. You can use your cash. You can use your old 401k. You can use your HELOC. You can use your credit card. There's so many different ways to get involved. So honestly, you don't really have a ton of excuses if this is something you want to do. Get started.